So, in order then to address the panic that was covered by the blanket guarantee a year ago, the 400 billion funding level of the Irish institutions can only be stabilised by the injection of the appropriate amount of capital. And that is an immediate injection of 31 billion. Now that will be into essentially 4 of the 6 institutions as follows. Anglo-Irish Bank, which the loan book of which is extremely doubtful and bad, will take a while to write down. And the capital that's required there will be just really working capital in order to have an orderly write down of that loan book. It'll be in the order of about 11 billion requirement, but to the extent that the subordinated loans already in there on that balance sheet, those subordinated loans will have to be written down to 0. Some people have said that there would be resistance and that it would reflect badly on credit ratings in Ireland and on the Irish state to write down subordinated loans on bank balance sheets. History and recent experience, the Russian crisis and South American crisis, Argentinian crisis, have shown that once a situation of crisis has actually been handled and it has been burst, and the consequences of that burst feed back into subordinated bondholders and others, the pain is taken and life goes on when markets reopen. And in Russia, the capital markets re-established themselves very quickly, even after huge amounts, billions of dollars and billions of rubles had been written off. So to write off a level of perhaps it would be about 3.7 billion remaining bondholders, subordinated bondholders in Anglo-Irish Bank, would not be a big deal and would be taken as just part of the medicine of restructuring and running down of that bank. By getting in the correct amount of capital into the other 2 main banks, Bank of Ireland and AIB, the proportionate shareholding by the state in those banks would go to a very large majority. It would be probably in the order of 80 to 85%. But it would be an opportunity rather than a problem that should happen. And the opportunity is this. It will be a firm expression, a real expression of recapitalisation of the banks to the proper level. And with that proper recapitalisation will come the underpinning and the stabilisation of the customer deposit base. With the co-timing of a wind down over the next few years of the Anglo-Irish loan book, the deposits at that bank would tend then to move into the other 2 banks, reducing the reliance of those 2 main banks on the interbank deposits. So that would be a very solid improvement to the financial structuring of the banking sector. As regards the Nationwide Building Society, that would also be a rundown situation because the losses there are just far too big. They're at a level of about 3.5 billion when the proper write-down levels occur. And their shareholders' funds are less than 1 billion at this stage. Therefore, the state, similar to the Anglo situation, would be providing an injection of capital just for the orderly rundown of that loan book. That's the commercial and other property-related loans. There's a small amount of mortgage lending on the balance sheet of Irish Nationwide Building Society, and that could be sold into the Educational Building Society, which, because EBS did not go at the same pace and with the same appetite and stupidity, really, into property development lending and property investment lending, the capital requirement there after write-downs is much smaller. In fact, it is only around about the 300 million rather than even a billion level. So that really is the correct approach for stabilising the Irish banks. As regards the collections and recoveries and realisations of the loans, because that is the source of the problems. At the written down values in what should be firewalled divisions of the banks where those loans originated, led by new managers who are non-compromised from the former days of when the loans were advanced. So new managers, new teams, or teams that are changed around internally, firewalled, stroke Chinese walled within the banks, are the best platform for the recoveries on those loans. This has been done in many Anglo-Saxon countries at local level and at provincial or at state level and at national level. It's addressing the problem. The problem is one of capitalization of the banks. We've been told actually by the government that the NAMA proposal has two main pillars. The first is that the balance sheets of the banks need to be cleaned up to avoid the banks becoming zombie banks. And the second pillar is that by discounting the bills, the bonds that would be issued by the NAMA entity in return for taking the bad loans onto the NAMA entity's balance sheet, those bonds would be discounted at the European Central Bank for cash, which cash would go onto the balance sheets of the banks in place of the loans. And that gives the illusory and momentary appearance that there's more liquidity in the bank's balance sheets. But the reality is, when the analysis is done, that at the moment the Irish banks have customer deposits at a level of about 230 billion and interbank deposit balances, including ECB balances, which were emergency cash loans or cash deposits by the ECB to the banks, of about 130 billion. And that 130 billion of bank deposits on the bank's balance sheets reflects an increase over the last 9 months of almost 50 billion in that type of funding, because that was required to replace the exit, the flight of deposits, customer deposits, that took place in around the same period. The customer deposits flight of about 31 billion, even notwithstanding that there was a blanket guarantee by the state. That's how chaotic and panicky the situation was.